Yeah, good afternoon, students. For the afternoon session of income tax amendments applicable for November 2020 exams. So let us continue it. In the morning session, we have completed all the November 2020 amendments from income tax. Now, in this afternoon session, let us discuss about May 2020 amendments. Since we didn't have the exam attempt in May, all the amendments applicable for May 2020 are also applicable for November 2020, right? And then we will do that RTP questions, right, Mom? So shall we start? Right. So this is May 2020 RTP. This is May 2020 RTP where we have all the amendments applicable for May 2020. Of course, some of the amendments we have already covered in the morning session. Those which are not covered, we will cover now. Okay, now, right. So the first one is regarding the enhanced surcharge rates, that is 25% and 37%, about the same. We have already covered in the morning class. That enhanced surcharge rates of 25% and 37%, that is not applicable with respect to the tax payable on short-term capital gains under section 111A, long-term capital gains under section 112A. Right? This amendment we have already seen in the morning session, morning class. All this example, everything we have seen. And coming to this rates of depreciation, 30%, 45%, this amendment also covered in morning session. I'll discuss only which are not covered. This cost inflation index 289 covered, 194 uncovered. Manner of allotment of the PAN, this is also covered. Very interesting. Same thing, but actually there were some amendments which are not covered here because let me tell you the reason why. Yeah, they have said this. August 2019 edition is already updated with May 2000 amendments applicable to May 2020. Basically, all the amendments made up to October 31st of October 2019 applicable for May 2020 exams. So since they have introduced this August 2019 edition, whatever the amendments came into effect, they have already included into that material. So that is why I think they have not covered in this RTP. Okay then, don't worry, I'll tell you orally with the help of the notes. Among which the most important amendments, I'll tell you, Ma'am. Of course, you might have already had that amendments in your respective coaching institution material. In case if not covered, okay, don't worry, you will get it. You will get that knowledge here now. Hope everyone able to see my notes. Respond, Ma'am. Very good. If your respective coaching institution material already covered, very happy, Ma'am. No need to worry. If not covered, don't worry, you can learn here. You can learn here now. In the first chapter, that is Introduction to Income Tax, the amendment is with respect to that enhanced surcharge rates. Enhanced surcharge rates. When it comes to individuals, HUF, AOP, BOI, and AGB, any other artificial juridical person. Earlier, it was like total income exceeding 50 lakhs, but not exceeding 1 crore. But not exceeding 1 crore. The surcharge rate applicable is 10%. Surcharge rate applicable is 10%. Exceeding 1 crore, earlier it used to be 15%. Now we have limits now. Exceeding 1 crore, but not exceeding 2 crores, 15%. 15%. Now the new slabs came into picture. Exceeding 2 crores, but not exceeding 5 crore. Not exceeding 5 crore. It is 25%. Then exceeding 5 crores, then it is 37%. So these two were newly added. These two are newly added. These two are newly added. This is the first amendment in relation to the Introduction to Income Tax. Two new enhanced surcharge rates added, and which is applicable in the case of individuals, HUF, AOP, BOI, AGP. Right now, with respect to remaining assessees, that existing surcharge rates continuous. Okay, ma. And after that, the second amendment is regarding that enhanced surcharge rates are not applicable with respect to tax payable on the special incomes covered under section 111A and 112A. That amendment we have seen in the morning session itself, along with the help of example. And next. Another important amendment from the second chapter, from the first chapter itself. Tax rate applicable for domestic company. Tax rate applicable for domestic company. Right. Before the amendment, after the amendment. Before the amendment, after the amendment, you can see that. Before the amendment, we need to see the previous year 2016-17 turnover, that is not exceeding 250 crores. Then the tax rate applicable for domestic companies 25%. Tax rate applicable for domestic companies 25%. Now after the amendment, they have said previous year 17-18 turnover, previous year 17-18 turnover not exceeding 400 crores, not exceeding 400 crores. Then the tax rate applicable 25%. tax rate applicable 25%. So what are the amendments taken place? Previous year base and turnover. Previous year base and turnover. Earlier 1617 250 crores. Now 1718 400 crores. Just a second more. Right now. So did you observe the changes? 1617 250 crores, 1718 400 crores. The government wants to give major benefits to the small scale industries, small scale companies who's having the turnover less than or equal to 400 crores. The government wants to give the benefits of concessional tax rate 25%. If this condition is not satisfied, 30%. If this condition is satisfied, 25%. Clear, ma? That is a very important amendment. And next, a rebate. About the rebate, you know it already, right, ma? Next amendment is regarding a rebate under section 87 capital A. Under section 87 capital A, rebate. Why at previous year 1718 it came into effect from 2020? See, actually, when that amendment was introduced regarding the 25% tax rate, it was introduced way back 2017-18. There they have taken the base of the preceding previous year 1617 turnover, and there the tax rate is 29%. The company's domestic company's tax rate was not reduced to 25% at a time. It was reduced gradually from 30% to 29%, then 29% to 25%. So initially, right, for the first time it came into effect in the year 1718, preceding previous year 1617. Later on, they've increased the turnover limits and decreased the tax rates, but they forgot to amend that previous year. Recently, that amended the previous year, and still they have taken 1718 only as the base. So whatever the tax rate applicable to the domestic company for the previous year 1920, still you have to take the base of 1718 only. No, it's not like that, Rupesh. It's not like that. It is applicable for all those companies which are satisfying that condition. Are you following now? Right? Just a second. Yeah. So even for the rate applicable for the 1920 companies, we need to look into the turnover of 1718 only. If that condition satisfied, then the domestic company tax rate applicable 25%. If that condition is not satisfied, 30%. Okay, ma'am. Next. So coming to the rebate, before the amendment, after the amendment, coming to before the amendment, the conditions are like, it is applicable only with respect to resident individuals whose gross total income not exceeding 3,50,000. Then if these two conditions are satisfied, The maximum rebate allowed is 2,500. 2,500. Now, after the amendment, resident individuals, second one, gross total income not exceeding 5 lakhs, and third one, the maximum rebate one can claim here, rupees 12,500. Rupees 12,500. Right now. So now the rebate amount increased it from 2,500 to 12,500 rupees. And the gross total income, sorry, it's not the gross total income. It is total income. Total income. Total income not exceeding 5 lakhs. Resident individuals only are eligible for this benefit, and whose total income not exceeding 5 lakhs rupees, they are entitled to a maximum rebate of 12,500 rupees. Okay, mom. Next. Earlier it was 3,50,000, 2,500. Now it is 5 lakhs, 12,500. Clear. Now let's moving on. And one more important point here is that many of the students under the impression that this rebate benefit is not allowable with respect to special incomes, but that absolutely wrong answer. A rebate under section 87A applicable for all the special incomes except one special income, that is 112 capital A long-term capital gains. Even for winnings from lotteries, you can claim rebate benefit. You can claim rebate benefit. A rebate is conditions are your total income not exceeding 5 lakhs. The total income even comprising of special incomes, no problem at all. Still you can claim a rebate benefit of 12,500. Are you following? Right. So this rebate benefit is not applicable only with respect to rebate under section 87 capital A is, however, not available in respect of tax payable in the rate of 10% on long-term capital gains under section 112 capital A. Under section 112 capital A. Only for this rebate benefit is not allowed. With respect to all other incomes, you can claim a rebate benefit. Clear? Yes, total income means after deducting all chapter 6A deductions. Total income means after deducting all chapter 6A deductions. So this is an important point, keep this in mind. Rebate benefit is not applicable with respect to long-term capital gains taxable under section 112A. Clear? Next. And after that, in income from house property, yes, we have very important amendments when it comes to income from house property. First one is about before the amendment, sir. Only one house property is eligible for self-occupation benefits. Self-occupation benefits. Only one house property you can treat it as self-occupied house property. Self-occupied house property before the amendment. Now after the amendment, with respect to two properties, SSE can claim self-occupation property benefits. SSE can claim self-occupation property benefits. Basically, what is the benefit? Self-occupied property. The benefit is that NAV starts from 0. Straight away, the format starts from NAV 0. Standard deduction 0. The only deduction allowable is interest on loans. Maximum of 2 lakhs or 30,000 as the case may be. 2 lakhs or 30,000 as the case may be. Right. So that means you're going to have a negative income in the case of self-occupied properties. Negative income in the sense it is a loss. Having a loss under the Income Tax Act is a benefit because you can set up that loss with any other head of income. Right. Thereby you can reduce your total income, you can reduce your tax liability. You can reduce your total income, you can reduce your tax liability. Clear, everyone? So that is why earlier there is a restriction that only one house property should be declared as self-occupied property. If you have more than one self-occupied property, at the option of SSE, one should be treated as self-occupied. The remaining self-occupied property should be treated as deemed to be let out. Deemed to be let out. Now, if you have more than one self-occupied property, sir, assuming that I have 3 self-occupied properties, example, I have 3 self-occupied properties. Earlier, what is the provision? 1 should be treated as self-occupied property, 2 should be treated as deemed to be let out properties. Now, after the amendment, if I have 3 self-occupied house properties, among which 2 can be declared as self-occupied, only it is enough to declare 1 property as deemed to be let out. 1 property as deemed to be let out. So how to make a choice among the 3 self-occupied house properties, which 2 should be treated as self-occupied and which one to be treated as deemed to be let out? Go for the option scheme. Are you following now? See, since you have the 3 house properties, house property 1, house property 2, house property 3, you have 3 options. Option 1, treat house property 1 as self-occupied property, remaining to deemed to be let out, treat house property 1 and 2 as self-occupied, house property 3 as deemed to be let out. Find out the total income from house property for this option. Option 2. House property 1 as self-occupied, house property 3 as self-occupied. Then house property 2 as deemed to be let out. Find out income from house property for this option. Next, option 3. House property 1 as deemed to be let out and house property 2 and house property 3 as self-occupied. Find out the income from house property. Now finally the decision, select the option having lower income from house property. Income from house. Select the option having the lower income from house property. Following now. So like this, you need to do the calculations. You will definitely get a question from this chapter now. Definitely from this amendment, you will get a question. And I am expecting the same question which is given by the ICAI in its amendments material. For May 2020 amendments, if you look at that supplementary material issued by the ICAI, there you find this question. There you find this question. Or if you look at the August 2019 edition of ICAI, August 2019 edition of ICAI study material, you have a question with respect to this amendment, where the assessee is consisting of 3 house properties. I think November 2020 RTP also contains the question, which we will discuss anyhow, don't worry. So you will be given with the 3 house properties like this, and 3 are self-occupied properties. 3 are self-occupied, among which you can now take out 2 properties as self-occupied. Since you have the 3 properties, 3 options. If you have 4 self-occupied properties, 4 options. 4 options. Option 4 will comes into picture. Are you following now? Next. So permutations and combinations, that's it. Next one. We have one more amendment in section 23(5) where the property is held as stock in trade. Before the amendment, they said up to the 1 year from the end of the year in which the completion certificate has been given. Up to 1 year, okay, it will be treated as self-occupied and nothing will be taxable under the head income from house property. Now that has been removed. That has increased it to 2 years now. Sir, in the exam we have to write the 4 options now. See, the properties are 3 options. Properties are 4 options. You need to write, but don't expect that kind of a lengthy question. 3 properties itself is a lengthy question, because 3 times you need to find out the income from house property. It's a lengthy question, so don't expect 4. In that case, that question should be given with 20 marks. A single question, 20 marks, not possible. Okay, now, right. 23(5) amendment is that when you are holding the property, that house property as a stock in trade, if it is left unsold within 1 year, that 1 year calculation starting from the end of the financial year in which you got completion certificate. Earlier, up to 1 year, the department wait. Nothing will be taxable under the head income from house property. Now that limit is increased to 2 years now. 2 years. For the first 2 years, the value should be taken as 0, nil. Annual value of such property which was left unsold for a consecutive 2 years period, the annual value should be taken as 0. I think that's not that important amendment. Next. With respect to self-occupied properties, the maximum interest benefit allowed is only 2 lakhs. The 2 lakh ceiling limit we should not see per house property, we should see per SSC. Sir, if I have 2 self-occupied house properties, for each self-occupied house property, shall I claim 2 lakhs? So 2 house properties, 2 lakhs into 2, 4 lakhs can I claim deduction under section 24B? Absolutely wrong answer. For self-occupied properties, the maximum deduction allowed is 2 lakhs or 30,000 as the case may be, irrespective of the fact how many self-occupied properties you have. Okay, now next. Next amendment regarding capital gains, that 50C we have already seen. Yeah, when it comes to capital gains, we have an important amendment. Under section 54. Under section 54. What section 54 explains about exemption of long-term capital gains arises on transfer of exemption of long-term capital gains, arises on transfer of long-term residential house property. Exemption of long-term capital gains arising on transfer of long-term residential house property. Long-term residential house property. Now, what is the amendment in this provision? Before the amendment now, reinvestment. So in order to claim the exemption benefit, in which capital asset we need to reinvest? A residential house property. How many residential house properties I can reinvest? Only one. Investment in one residential house property is eligible for exemption. Eligible for exemption. Investment in one residential house property eligible for exemption. Even if you invest in more than one residential house property, only one residential house property's investment will be considered for exemption under section 54. Are you following now? But now after the amendment, what they have said is, if long-term capital gains not exceeded 2 crores, if long-term capital gains does not exceed 2 crores, now what they can do is, investment in 2 residential house properties will be considered for exemption. Investment in 2 residential house properties will be considered for exemption. Either you can purchase 2 residential house properties, or you can construct 2 residential house properties. And Chandra read it, this is only one-time benefit. This benefit can be claimed by the assessee only once in a lifetime. This benefit is once in a lifetime. This is one-time benefit. This is one-time benefit only, sir. The condition to be satisfied is your long-term capital gains does not exceed 2 crores. 2 crores exceed above them. 2 crores exceed above them. Then you can make reinvestments into 2 residential house properties, and the investment in 2 residential house properties will be eligible for exemption benefit. Sir, if my long-term capital gains not exceeded 2 crores, is it mandatory for me to acquire 2 properties? Can I continue with 1 residential house property investment? You can. The old provision continues, ma. If you want to invest in only 1 residential house property, you can make investment into 1 residential house property and you can claim exemption. That, investment into 2 residential house property is an option given to you. It's not mandatory that everyone should invest in 2 house property where the capital is not exceeded 2 crores. It's not mandatory. It's an option given to you. Whether you are utilizing it or not, it's up to you, sir. It is up to you. Clear, everyone? The old provision, investment in 1 residential house property, that continues. Clear, everyone? So that is a very important amendment, right? You might expect a question from this amendment. At least for the problems on total income, an adjustment will be asked. Next. The amendments which are already covered in November 2020 RTP, I'm not discussing. Which are not covered only, I'm discussing here. In PGBP, sir, we have an important amendment. Buyback of the shares amendment is not that important, sir. Yes, 1034A, we have an amendment regarding the buyback of the shares. It's not that important. So that is why I have not discussed that. Yeah, 43B, yes, we have some important amendment. We discussed about deductions only on actual payment. Deductions only on actual payment. 43B. Irrespective of the method of accounting being followed. Irrespective of method of accounting being followed. Right? With respect to seven expenses, the deduction is allowed only on actual payment. The deduction is allowed on actual payment. Even if you follow the accrual basis of accounting, still the deduction is allowed with respect to that seven expenses only on actual payment. Now for that list, two more added. Two more payments are added, sir. Not two exactly, only one payment, that is any sum payable by the SSE, any sum payable by the SSE as interest on any loan or borrowing, from a deposit taking NBFC or systematically important non-deposit taking NBFC. Systematically important non-deposit taking NBFCs. So this is newly added to the list of 43B payments. Newly added to the list of 43B payments. Right. What is this point about? See, in 43B, we already have one expenditure. Any sum payable by the SSE as interest on any loans or borrowings from any public financial institutions. Right? So then that interest will be allowed as deduction only on actual payment. See, whenever you have borrowed a loan, in relation to your business or profession, the interest payable on such loan or borrowings will be allowed as deduction under section 36(1). But if you borrow the loan from a financial institution, bank, then the deduction with respect to interest is allowed only on actual payment, where it was mentioned 43B. So that means if the interest is actually paid, that is eligible for deduction under section 43B. Wrong answer. 43B is not a deduction section, for your kind information. 43B is just a compliance section. Under the head PGBP, the deductions were allowed only from section 30 to 37. and 40 small b when it comes to partnership forms. That's it. 43B is not a deduction section, it's a compliance section. It said, okay, for this list of payments, the deduction is allowed only on actual payment. Ante sir. But the deduction is allowed under respective sections only. If I borrowed a loan from a bank from my business purposes, the interest paid allowed as deduction under section 36(1) only. But on payment basis mentioned in 43B. The deduction is allowed on payment basis mentioned in 43B. Is that clear, everyone? Next. So the reason for this amendment, I will tell you. So this time, I have taken a loan from Muthoot Finance, లేదా M&M Finance, లేదా Sundaram Finance, which is not actually a banking company, a banking institution. It's an NBFC. It's an NBFC, non-banking financial corporation. I've taken a loan from Muthoot Finance, right, for my business purposes only. Basically, under section 36(1), what you have learned, interest is allowed as deduction on accrual basis. Yes or no? Under section 36(1), you have learned that interest is allowed as deduction on accrual basis. Now, I've taken a loan from Muthoot Finance. So, even if I'm not paying the interest to Muthoot Finance, I can still claim it as deduction, because it is not covered by 43B. I'm talking about before the amendment. Anyhow, after the amendment, it has covered. It has covered. Before the amendment, I'm talking. So those SSEs who happen to take the loans from these kind of NBFCs started not paying any interest to them. Despite of not paying the interest, they are getting deduction here anyhow. Under section 36(1), what they have said, deduction is allowed on accrual basis of accounting. Now all these NBFCs went to the department along with section 43B. So look at the 43B. Interest is allowed as deduction on payment basis only when the loan is borrowed from the bank. We are also providing all the services of a bank. Why is this partiality? Only when the loan is taken from financial institution, you made it covered under 43B. In order to claim the deduction, the SSE paying interest to them only, not to us. Because even if the interest not paid to us, still the SSE is eligible for deduction. Accrual basis of accounting. Very partiality. No person is paying interest to us, but you are allowing deduction to them. So let us, our payments also, our loans also covered under 43B. And చెప్పి రిక్వెస్ట్ చేశాయండి all the NBFCs, non-deposit taking NBFCs, deposit taking NBFCs అన్ని డిపార్ట్మెంట్ దగ్గరికి వెళ్ళి CBDT దగ్గరికి వెళ్ళి గొడవ పెట్టేస్తే they have introduced this payment into 43B. Now, even if you are taking the loans from NBFCs, interest will be allowed as deduction only on actual payment. Only on actual payment. Are you following now? So, yeah, deposit taking NBFCs, non-deposit taking NBFCs. Ante enti sir? I'll tell you examples. Examples for deposit taking NBFCs. You can take the example of Muthoot Finance. You can take the example of M&M Finance. You can take the example of Sundaram Finance. All these people are covered under deposit taking NBFCs, and they are allowed to accept the deposits from public. They are allowed to accept the deposits from public. Sir, what about non-deposit taking NBFCs? Non-deposit taking NBFCs. Non-deposit taking NBFCs. You can take the example like IDFC, Industrial Development Finance Corporation Limited. You can take the example of Aditya Birla Finance. Aditya Birla Finance. You can take the example of TVS Credit Services. TVS Credit Services Limited. So like this, you can take the example. systematically important non-deposit taking NBFCs. These are actually public limited companies registered with the RBI, and their assets should exceed 500 crores. Should exceed 500 crores. So then they will be called as non-deposit taking NBFCs, and these were the examples. Okay, mom. Next. Hope you noted down this. So this is a very important amendment. Very important amendment when it comes to 43B. A new payment added to 43B list. Whenever you borrow the loan or borrowings from deposit taking NBFCs, systematically important non-deposit taking NBFCs, right, the interest now will be allowed as deduction only on actual payment. Only on actual payment. Clear, ma'am? Next. There is one more important amendment to section 48(1). What is 48(1)? Disallowances. Small here discussed about disallowances. In that 48(1) explains about the disallowances with respect to non-resident payments, or with respect to foreign companies, or with respect to payments made to a person residing outside the India. Then actually you will be having two obligations. Obligation number 1, you must deduct the TDS. Number 2, whatever the TDS deducted, that should be remitted to department. If these two obligations are satisfied, you will be eligible for deduction. If any of these obligations are not satisfied, you are not entitled for deduction. 48(1) comes into picture. 100% disallowance should be happen. 100% disallowance should be happen. When 48(1A attracts, only 30% disallowed amma. If 48(1) attract 100% disallowance. Now, what is the amendments to this section now? The amendment is that, just a second, ma. Sir, actually there is a benefit in section 48(1A). What is the benefit, ma'am? Even if the payer made any default, if payer made any default means the payer has made the entire amount to the payee without deduction of TDS. Without a deduction of TDS. Let us assuming that Mr. X is a payer and making the payment to Mr. Y, payee. So whenever he is making the payment, the payer has to deduct the TDS. Payer remitted the same without deduction of TDS. Without deduction of TDS. So that means there is a default the payer has done. But in fact, if payee considers the same as his considered that amount as his income in the calculation of his total income, and if payee pays the tax on it, then there will be no default with respect to payer. The payer can claim 100% amount as deduction. Earlier, this benefit was there only in section 40A(1A). Now, this benefit being extended to 40A(1) as well. 40A(1) kuda ee benefit ni extension chestarama. If such non-resident or if such foreign company considers that amount in the calculation of its total income, and if that non-resident or foreign company paid the tax on it, the payer no disallowance will be attracted. Payer can claim entire expenditure as deduction while calculating his business income. Earlier, this benefit is only to 40A1A. Now, this benefit extended to even 40A1 as well. This is the latest amendment in 40A1. Any doubts, ma? Someone asked 108 page notes. So this is a 108 page notes, ma. And coming to income from salaries, the only amendment we have is regarding that standard deduction. As you all know, the standard deduction is how much? 50,000 rupees. The standard deduction is 50,000 rupees. Okay, ma'am. Right? Earlier it used to be 40,000. Now it's been increased to 50,000 rupees. Now it's been increased to 40,000 rupees, 50,000 rupees. Next. Next. Then after that, coming to the next amendment, sir, when it comes to the Payment of Gratuity Act, you know, the statutory limits. If employee is covered by the Payment of Gratuity Act, the statutory limit is 20 lakhs. Earlier, if the employee is not covered by the Payment of Gratuity Act, it is 10 lakhs. Now it is also increased to 20 lakhs. It is also increased to 20 lakhs. These two are the amendments from income from salaries. Right now, let me write the same. Income from salaries. Income from salaries. First one is regarding standard deduction. As you all know, before the amendment it is 40,000. After the amendment it is increased to 50,000. Increased to 50,000. Anyhow, subject to your gross salary. If gross salary is less than 50,000, then the deduction is restricted to gross salary. Deduction is restricted to gross salary. If gross salary exceeding 50,000, then you can claim a maximum deduction of 50,000 rupees under section 16 clause 1A. Under section 16 clause 1A. Okay, ma'am. The second amendment is regarding statutory limit applicable for employees not covered under Payment of Gratuity Act 1972. For employees not covered under the Payment of Gratuity Act 1972. Before the amendment, it used to be 10 lakhs. Now, after the amendment, this has been increased to 20 lakhs. In order to make in line with the employees covered in the Payment of Gratuity Act. For employees covered in the Payment of Gratuity Act, anyhow they have 20 lakhs. So why not for the employees who are not covered under Payment of Gratuity Act? That is why the limit is increased to 20 lakhs. Statutory limit applicable for employees not covered under Payment of Gratuity Act. So earlier it is 10 lakhs, now it is increased to 20 lakhs. So these two are the amendments from income from salaries. And next. Other sources, whatever the amendments you have, hardly one or two that are negligible. It's not that important. Chapter 6A reductions, yes. In Chapter 6A reductions, we have very good amendments and very important amendments as well. Let me show you that. This is the first amendment, ma. Contribution to the notified pension schemes of central government, right? And what is the amendment here? For employees contribution, there is no amendment. No amendment. The amendment is with respect to employer's contribution. The amendment is with respect to employer's contribution. If the employer is happen to be central government, then the deduction is allowed under section 80 CCD to 14% of salary. It's a latest amendment. Earlier it used to be 10% only. Earlier it used to be 10% only. Now this has been increased to 14% of salary. You must be very, very careful here. Under section 80 CCD subsection 2, we can claim deduction with respect to employer's contribution. Employer's contribution tax treatment allowed to the first we have to treat it as income, as a perquisite while calculating income from salaries. While calculating the income from salaries, first we should treat it as perquisite now. First we should treat it as perquisite. And then chapter 6A deductions, 80 CCD subsection 2, if the employer happened to be central government, 14% of salary you can claim it as deduction. 14% of salary you can claim it as deduction. Before the amendment it was 10%, now it is increased to 14%. Clear everyone? This is the amendment applicable under section 80 CCD. And there were some new sections introduced like 80EEA, 80EEB. Now let us see what are the new sections. Look at this. Section 80EEA. Applicability, applicable only to individuals. Applicable only to individuals. And what is the deduction you are going to get? You are going to get the deduction with respect to interest on housing loans. If you remember 80E series, 80E series give the deductions only with respect to interest on various loans. 80E interest on educational loan. 80EE interest on housing loans. 80EEA interest on housing loans. 80EEB interest on loans taken for the purpose of purchasing the electronic vehicles. So 80E series is going to give you the deduction with respect to interest on various loans. Okay, ma'am. Sir, interest on housing loans, we already have the deduction benefit under section 24B now. Correct. Why again 80E, EE, why all these sections? Additional benefits, ma'am. When department giving you additional deduction, don't you require? Don't you accept? Deduction is always a benefit to us. We will accept with the, right? A very big smile on your face. You have to accept deductions. Sir, already we have a section called section 80EE, interest on housing loans. In addition to section 24, why again 80EEA? This is a new section introduced by Finance Act 2019. Why there is a need arises? The reason is that 80EE is applicable only with respect to the loans sanctioned during the previous year 2016-17. During the previous year 2016-17. What if the case if I have received the loan during the previous year 19-20? I am not entitled for 80EE now. So that is why they have introduced 80EEA. In order to claim the benefits under section 80EEA, interest on housing loans, and very important condition is that that house must be used for your residential purposes. Residential purposes. Conditions to the loan should have been sanctioned between the previous year and 1920. Right? And the stamp duty value of the residential house property not exceeding 45 lakhs. Right? And then should not claim, just a second more. Yeah, let's continue. Right, the stamp duty value of the residential house property shall not exceed 45 lakhs and should not claim any deduction under section 80EE. Sir, I've already taken one housing loan, sir, right, in the year 2016-17, and I'm already claiming deduction under section 80EE. Sir, I will take one more loan during the previous year 1920, sir. I'll purchase one more house property. Now, shall I claim deduction under section 80EE? No, not eligible. If you're already covered by 80EE, you're not entitled for 80EEA. This is a benefit. Either 80EE or EEA. Clear, everyone? Right? and you should not own any residential house property on the date of sanctioning of the loan. As on the date of sanctioning of the loan, you should not own any other residential house property. Whatever the property you are going to acquire, that should be your first residential house property. Right now, next. The loan should be taken from financial institution, that point common. The loan should be taken from financial institution, compulsorily. Right now, next, the maximum deduction you are going to get here is 1,50,000. Under section 80 EE is just 50,000. It is just 50,000. Under section 80 EEA, you can claim 1,50,000 as deduction now. So that means if you have a self-occupied property using for your residential purposes, under section 24B, there you can claim 2 lakhs deduction. There you can claim maximum deduction 2 lakhs, and here you can claim 1,50,000. In addition to that, you can claim here 1,50,000. Are you following, ma? It's a new section introduced by the Finance Act, so one must be very, very careful. At least one MCQ definitely asked from this provision. Next, 80 EEB, yet another new section introduced by the Finance Act 2019. Yet another new section. 80 EEB. What is this? Deduction for interest on loans borrowed for the acquisition of electric vehicles. See, department and central government wants to encourage the usage of electric vehicles. So what is the advantage of using the electric vehicles? So many advantages. The biggest advantage is that we can reduce the consumption of petrol and diesel, which are always in scarcity in India, and which India is more depending on Arab countries because of the same. Whatever the petrol and diesel consumption we are doing in India now, all that petrol and diesel, majority of the petrol and diesel we are importing from Arab countries, yes or no? Isn't it? Right? So when you are used electric vehicles more, there is a reduction in the consumption of petrol and diesel. And you need not depend on any other person for that particular goods, petrol and diesel. Second biggest advantage, a reduction in pollution. Reduction in pollution. Pollution will be reduced to a great extent. Because of that, electric vehicles, there will be zero pollution. Zero pollution. Pollution in terms of, air pollution, sound pollution, all will get reduced more. Electric vehicles, you won't even get a sound, sir. Even if you pass on an electric vehicle, you don't feel that you're passing a vehicle. The sound will be very less. Very less. Clear? So what if the case, if Royal Enfield comes up with the electric technology, there will be no sound now, yes, then no one will purchase Royal Enfield, sir. Many of the people purchasing the Royal Enfield only because of that sound. Yes, sir. No. Sir, come back. So if you taken any loan for the purchase of electric vehicles, again the condition is that the loan should be borrowed from a financial institution. Purpose must be purchasing of electric vehicles. Even if you are going to use that electric vehicle for your personal purpose, doesn't matter. Still you are entitled for deduction. What is you are going to get as deduction here? Interest on loans. And what is the maximum deduction we can get? 1,50,000. Every year we can claim a deduction of 1,50,000. Sir, for how many years I can get this deduction? As long as your loan repayment continues. As long as your loan repayment continues. You can claim every year 1,50,000 as deduction. Of course, subject to your actual interest payment. If you paid less than 1,50,000, demanding 1,50,000 as deduction, that's not allowed. If you pay only 30,000, claiming 1,50,000 deduction, that's not allowed, ma. The deduction is restricted to actual interest payment. This is not a flat amount, sir. Don't be under an impression that, sir, 80 DD, we have a flat amount of deductions, 75,000, 1,25,000, normal disability, 75,000, severe disability, 1,25,000, 80 you also, we have the same kind of flat deductions. Sir, these are flat deductions or no, subject to your actual interest. Clear, everyone? So 80 EEA, 80 EEB, very important. Definitely you can expect MCQs or at least a question from this amendment, sir. Okay, now next important amendments. Yes. Coming to the return of income chapter, sir. Return of income, you have a very interesting amendment. There it is. Yes. Right. Now, what is that very interesting amendment? I'll tell you, ma. Generally, sir, whether all the SSCs are subject to the filing of income tax returns? Answer is no. No. Not all the persons are liable for filing of income tax returns. It's not mandatory for all the people. There is some criteria. Only if that criteria is satisfied, that assessee is liable for the filing of return of income. Sir, what is the criteria? What is the criteria? You can see here. Assessee is required to file return of income compulsorily under section 139(1). Companies, partnership firms, LLPs compulsory, irrespective of their turnover, irrespective of their total income, right? They have to file the return of income compulsorily. Individuals HU of AOP, BOI, AJP, filing of return of income is mandatory only when the gross total income exceeding basic exemption limit. Right? Before giving effect to exemption under section 51, this is an important adjustment. One should be very careful here. One should be very careful here. Filing of return of income is mandatory only when gross total income exceeding basic exemption limit. Gross total income exceeding basic exemption limit. So before giving exemptions under section 54. So what do you mean by that? So look at this example. Income from salary is 1 lakh. Long-term capital gains 5 lakhs. So my total income 6 lakhs. But actually I have made reinvestment. I have made reinvestment of 5 lakhs and which is eligible for exemption under section 54. Literally speaking, what is my total income? Income from salary is 1 lakh. Long-term capital gains 5 lakhs minus exemption under section 54, 5 lakhs. So what is my taxable capital gains? Taxable capital gains 0. So my gross total income comes down to only 1 lakh. My gross total income not exceeded basic exemption limit. So I'm not eligible for filing, I'm not liable for filing of return of income. Not like that, not like that. Before giving exemption, before giving effect to exemptions under section 54, look at the gross total income. So before claiming this exemption, what is your gross total income? 1 lakh income from salaries, 5 lakhs long-term capital gains, 6 lakhs exceeded basic exemption limit. File the return of income. But sir, after claiming the exemption, my total income is only 1 lakh. Yes. My tax liability is 0. Yes. Now, do I need to file return of income? Yes. What for? For what? So disclose the same information. Filing of return of income is nothing but disclosing the information in a prescribed format to the department. Filing of return of income doesn't mean that you are liable for the payment of tax. Are you following now? Many of the persons under the impression that if I ask to file the return of income, sir, do I need to pay any tax? Not required, yaar. I'm just asking you to file a return. That's it. I'm just asking you to file a return in a prescribed format. Are you following now? So whenever you are looking the gross total income for the purpose of filing of return of income, before giving the exemptions under section 54, before giving the exemptions under section 54, look at the gross total income. If exceeds basic exemption limit, for these people, filing of return of income is mandatory. Filing of return of income is mandatory. Next. So actually we have some amendment with respect to this. Nowadays, return of income filing is not only the criteria is your total income, it also now the criteria is your spending, is your luxury. Like if you have made deposits into bank greater than 1 crore. Now you are subject to filing of written off income. If the deposit amount exceeding 1 crore during the previous year, you are subject to filing of written off income. Irrespective of your gross total income, irrespective of your total income, if your deposits exceeding 1 crore. So if that particular assessee has deposited an amount or aggregate of the amounts exceeding 1 crore in one or more current accounts, in one or more current accounts, in one or more current accounts maintained with a banking company or a cooperative bank, then you are now entitled to file the return of income. You have to file the return of income compulsorily. Next, second point, has incurred expenditure in relation to the travel to a foreign country. Traveling expenses in relation to foreign to, if exceeds rupees 2 lakhs, exceeds rupees 2 lakhs. See, even if you book tickets for USA or UK, the tickets cost itself increases more than 2 lakhs only. More than 2 lakhs. Right? So they said that if such person has incurred expenditure and amount of aggregate of the amounts exceeding 2 lakhs for himself or any other person for travel to a foreign country, if exceeds 2 lakhs rupees, filing of return of income is mandatory. You need to file the return of income compulsory. Or this is very silly, where your electricity charges during the previous year, electricity bills exceeds rupees 1 lakh, you need to file the return of income compulsory. So that means on an average, if your electricity bill, if exceeding some 8,200, some 8,300 a month, then you are subject to the filing of return of income. Because let us take 8,200 into 12 months, no, not exceeding. 8,300 into 12 months, not exceeding. 8,333 into 12 months. Okay, now it is coming 1 lakh. And that means let us suppose that your electricity bill per month is 8,400. Your electricity bill per month is 8,400. So per annum, it comes around 1,800,000. So you are subject to the filing of return of income. This is injustice. Right, ma? See, nowadays, electricity bill, because of the new slab rates, on an average, if you have some AC, fridge, right, smart TV, laptops, right, a chimney and washing machine, like this kind of household appliances, on an average, it is coming around 4,000 to 5,000. 4,000 to 5,000. If you have some 2 air conditioners in 2 bedrooms, let it be some 2 refrigerators, you have a separate TV in the bedroom. So electronic appliances increases, your electricity bill increases. For a part-time electricity bill 8,400 per month can exceed aithe, you need to file the return of income. You need to file the return of income. Ante olden days, the filing of return of income is purely depends upon his income levels. His income levels. Just now we have seen if the gross total income before giving the exemption under section 54 exceeding basic exemption limit, then only you are liable to file the return. But now if you satisfy any of these criteria, if SSC satisfies any of the above criteria, then he is subject to filing of income tax return. Then he is subject to filing the income tax return. Compulsory basis. Compulsorily, he has to file the income tax return. This is the amendment, a very important amendment in the return of income chapter. Expecting an MCQ from this. Next. TDS and TCS, the most important points we have covered already, the important sections, right? Under section 194A, when it comes to interest payments, the limit increases to 40,000 rupees, 50,000 rupees, right? Because of section 80 TTB, this amendment has taken place. (194DA), we have a latest amendment, sir. 194DA, a latest amendment. Any sum insured under insurance, life insurance policy. 194DA, what was that amendment? I'll tell you. TDS and TCS. TDS on maturity proceeds. TDS on maturity proceeds of life insurance policy. TDS on maturity proceeds of life insurance policy. Before the amendment, here we got the amendment with respect to rate of TDS. We got the amendment with respect to rate of TDS. Before the amendment, the rate of TDS 1%. 1%. Now after the amendment, the rate of TDS increases to 5%. Rate of TDS increases to 5%, and this is came into effect from 1st September 2019. Came into effect from 1st September 2019. You must be very careful here. If the maturity proceeds are paying before 1/9/2019, that insurance company should deduct the TDS at the rate of 1% only. If the maturity proceeds are paying on or after 1/9/2019, then at 5% one should deduct the TDS. Next, 194I, TDS on rent. TDS on rent. Here the amendment is with respect to increase in the threshold limit. Increase in the threshold limit. Threshold limit. And the limit up to which the TDS is not to be required, not to be deducted. Before the amendment, sure, the threshold limit is 1,80,000. Now after the amendment, the threshold limit is increased to 2,40,000. Threshold limit increased to 2,40,000. This is yet another very important amendment. Next. 194M, 194N already covered. That's it. That's it. Right. Actually, we have one more section as well regarding 194IB. Again, TDS on rent. 194IB. Again, TDS on rent. What is this? 194IB is applicable. Applicable to whom? 194IB is applicable to the individuals or HUFs whose books of accounts are not subject to tax audit under section 44AB during the preceding previous year. See, if that individuals or HUF's books of accounts are subject to tax audit during the preceding previous year, they will be covered by 194I. They will be covered by 194I. If their books of accounts are not subject to tax audit, then they will be covered by 194IB. 194IB is also a new section, TDS on rent, applicable only for individuals and HUFs whose books of accounts are not subject to tax audit during the preceding previous year. Now, those individuals are HUFs paying the rent amount exceeding 50,000 per month. Threshold limit enta sir 194IB lo unte 194IB lo threshold limit is equal to 50,000 per month. So if the rent amount is up to 50,000 per month, no need of deduction of TDS. But if rent amount exceeding 50,000, on entire amount TDS should be deducted. What is the rate of TDS? 5%. Rate of TDS 5%. On the entire amount you have to deduct the TDS amount. Entire amount. Rate of TDS 5%. Sir, when to deduct? Time of deduction. So assuming that I am paying a rent of 60,000 per month. Now shall I deduct every month at the rate of 5%? Not required. You can deduct the entire TDS at the time of entire TDS should be deducted at the time of payment of March month rent. Entire TDS should be deducted at the time of payment of March month rent. So only one time, but on the entire amount. Example, let it be rent is equal to 60,000 per month. Now TDS under section 194IB is equal to, should be deducted in March month. 60,000 into 12 months into 5%. How much you will get, sir? 36,000. So while you are paying the March month rent of 60,000, out of which 36,000 should be deducted in the form of TDS, only that remaining 24,000 you can pay to your landlord, owner. Sir, what if the case if I vacate the property during the previous year? Sir, I have vacated the property in the month of December itself. If tenant vacated the property in December 2019, then only up to December 2019 rent deduct the TDS. Now in that case, TDS under section 194IB is equal to 60,000 per month, December ante 9 months into 5%. So 60,000 into 9 months into 5%. You will get 27,000. So while paying the December month rent, deduct the TDS at the rate of 5%. So that means 27,000 should be deducted. This is yet another very important amendment. 194IB. So with that, we also covered all the important amendments from May 2020 as well. Some of the amendments were omitted because they are insignificantly, comparatively less important topics. Let me show you one thing. Right. So you might have seen already this material, reference here for quick revision, which was released by the ICAI. So it was given uh, a very crispy manner. All the important provisions of course, it has made only for few chapters, but make the best use of it. Like you can see here, you can see the TDS at one page, in a single page, all the TDS provision in a very crispy manner. So very beautiful, sir. Excellent initiative taken by ICI, right? So all 192, 192A, when should be deducted, who is a payer, who is the payee, rate of TDS, time of deduction, are you following? So 194DA, I'll tell you the amendments here itself. What are the amendments? In 194DA, this 40,000 is an amendment, sir. Actually, earlier it used to be 10,000. Now the limit is increased to 40,000. 40,000. Earlier it is only 10,000, sir. Right? Next. 194DA, just now we have discussed the amendment. Earlier it is 1% is the rate of TDS. Now it is increased to 5%. 5%. And came into effect from 1st September 2019 onwards. Next. 194I threshold limit. 194I threshold limit. Earlier it was 1,80,000. Now it is increased to 2,40,000. Now it is increased to 2,40,000. Next. 194IB. 194IB, just now we have discussed. Payment of rent by certain individuals or HCFs whose books of accounts are not subject to tax audit. If subject to tax audit, they will be covered by 194I. Not subjected to tax audit, they will be covered by 194IB. 194IB. Threshold limit, if exceeding 50,000 per month, they are subject to the deduction of TDS. What is the rate of TDS? 5%. The rate of TDS is 5%. And time of deduction, as I said, at the time of credit of the rent for the last month of the previous year, obviously the March month, or the last month of the tenancy. And that means if you vacated the property before the end of the previous year, then the month in which you are vacating the property, in that month you need to deduct the entire TDS. Next. This 194M and 194N we have already discussed in detail. And this is regarding advanced tax. No amendments actually made here. Advanced tax provisions. But you can get all that very crispy manner and very easy manner. All the provisions at single place regarding the TCS and self-assessment. So make the best use of this material. Make the best use of this material. Everyone should make the best use of this material. And filing the return of income, as I said, the amendments covered here. Any person who is during the previous year has deposited more than 1 crore, in one or more current accounts maintained with a banking company or a cooperative bank, compulsory they have to file the return of income. And has incurred expenditure of more than 2 lakh for himself or any other person, travel to a foreign country, compulsory file the return. Has incurred expenditure of more than 1 lakh towards consumption of electricity. If your electricity bill exceeding 1 lakh per annum, you are also subject to the filing of income tax return. Okay, now that's it. Now Shall we take a break or shall we continue? Your wish. Tell me, sir, break or continuation? Continue? Yeah, very fine. Now let's continue, Gopi. It will be hardly for another 30 minutes. I'll discuss this RTP questions. Then we'll have a complete closure of the session. Okay, ma? Everyone, 30 minutes more. We will discuss RTP questions. Only income tax. Today only income tax, ma. For GST, day after tomorrow. Today only income tax. We will discuss only income tax RTP questions. Okay, now? Yeah. Yes. So from here, the questions are started, ma. Questions and answers. First, we have the objective type questions, MCQs. So any one of you already solved these MCQs? Anyone? Very nice, very good, ma'am. Look at the first question. In the case of let out property, electricity bills are in the name of the owner of the property. Then who has to file the return for electricity consumption in excess of 1 lakh? See, in that case, if it is a let out property, ma, this electricity consumption, that provision is not applicable to owner. When owner himself, his electricity consumption exceeding 1 crore with respect to his residential house property, 1 lakh, exceeding 1 lakh, then the filing of return of income is mandatory. We need to look into the own electricity consumption. If tenancy electricity consumption taken into picture, ma, if I have 5 properties, among which 5 electricity bills exceeding 1 lakh, obviously it will exceed 1 lakh. So every year I need to file the return of income. It's not like that. Yeah. Mr. A, aged 52 years, is a CEO of XYZ Enterprise Limited. Okay. During the previous year, 2019-20, he earned a salary of 1 crore 65 lakhs. So now while calculating the total income, how much I should take it as income from salaries? Should I take entire 1 crore 65 lakhs or should I deduct standard deduction of 50,000? This is the only information you have regarding income from salaries. How much should I take? 1 crore 65 lakhs or after deducting standard deduction 50,000, it will comes 1 crore 64 lakh 50,000. Right. I should take after the deduction of standard deduction. So 50,000 you have to deduct here, ma. Then 1 crore 64 lakhs 50,000 you have to take. 1 crore 64 lakhs 50,000 you have to take as your income from salaries. If they use the word like salary income, computed, salary income computed, if they use the words like computed, that is final figure. that is final figure, you can directly take into the main column. You should not deduct any more standard deductions. You should not deduct any more standard deductions. Are you following me? If they use the words like income from salary or salary income within the brackets computed, that is a final figure. You need to understand it. That is a final figure. That means after deduction of standard deduction. Clear, everyone? Right. Next. And long-term capital gains on sale of listed equity shares amounting to 1,06,500. Now tell me, what is my long-term capital gains should I take for my total income computation? Should I take entire 1,06,500 or only 6,000 or only 6,500? While calculating total income, how much long-term capital gains should I take? Entire 1,06,500 or only 6,500? The answer is only 6,500 is absolutely correct answer. Because it is said that long-term capital gain and sale of listed equity shares. So 112A comes into picture. And as we already learned, as per the provisions of section 112A, flat amount of 1 lakh you can claim as exemption. Claim that 1 lakh exemption, only 6,500 is liable to tax under section 112A at a flat rate of 10%. At a flat rate of 10%. Clear, everyone? Next. He earned interest income of 4,82,778 on savings account. You can see the age 52 years. The interest income is from savings account. Now, under which section should I claim deduction? 80TTA or 80TTB? 80TTA or 80TTB? Answer, I should claim deduction under section 80TTA. 80TTA. 80TTB is applicable only with respect to the senior citizens, very senior citizens. And that is benefit applicable to the interest on savings account, interest on fixed deposits, interest on recurring deposits. All types of interest you can claim deduction, maximum of 50,000 rupees. But under section 80TTA, maximum of 10,000 rupees. Maximum of 10,000 rupees. Clear, everyone? Next. Further, he has provided the details. He has not received any house rent allowance. Very nice. So no HRA, nothing here. Mr. A took a loan from State Bank of India on 27th of October 2017 for repairing of the house self-occupied. At Delhi and paid interest on such borrowings 80,000, 1,50,000 towards principal. Now tell me, sir, how much amount I can claim as deduction in the form of interest on loans under section 24B? Can I claim entire 80,000 as deduction? Can I claim entire 80,000? Answer is no. Restricted to 30,000 only because the purpose is repairs. The purpose is repairs. So maximum deduction we can claim 30,000. Self-occupied repairs. Maximum deduction 30,000. What about this 1,50,000? Can I claim deduction under section 80C? Housing loan repayments, principal payments. Principal payments. Under section 80C, can I claim deduction? Answer is absolutely. No. The loan should have been borrowed either for the purpose of purchasing the residential house property or for the construction of the residential house property in order to claim the housing loan repayments under section 80C. Here the purpose is given repairs. How can you claim deduction under section 80C? Principal portion will be allowed as deduction under section 80C. Correct. Correct. But here the purpose of the loan, look at. Clear, everyone? Next. Mr. A has made the following payments towards medical insurance premium. Okay. On the health policies taken for his family members. Medical premium for his brother 13,500 by check. Can I claim it as deduction under section 80D? Can I claim it as deduction under section 80D? Answer is absolutely no, I cannot. Under section 80D, you are entitled to claim deduction only with respect to assessee, spouse, children. assessee, spouse, children, and parents. That's it. Brothers and sisters are not covered in the definition of family as per the provisions of section 80D. As per the provisions of section 80D. 80DD it covers. 80DDB it covers, but not 80D. 80D only two categories. First category assessee, spouse, children. Second category parents. Clear everyone. Hence this 13,500 not eligible for deduction. Medical insurance from premium for the parents 17,670. Yes, we can claim. Medical insurance premium for self and spouse 21,000 we can claim under section 80D. Next. He also incurred 6,400 towards preventive health checkup of his wife in cash. In cash, can I claim it as deduction? Under section 80D, yes or no? Answer is absolutely yes, I can claim. Yes, I can claim. Preventive medical health checkup, even if you made the payment in cash, eligible for deduction. Eligible for deduction, but subject to a maximum of 5,000. That 5,000 is also subject to overall ceiling limit of 25,000. Overall ceiling limit of 25,000. Here the assessee is not a senior citizen, 52 years and older. So overall ceiling limit of 25,000. Out of 25,000, you already claimed 21,000 here. You already claimed 21,000 here. So the maximum deduction you can claim in the form of preventive health checkup is only 4,000. Only 4,000. Clear everyone. Next. And then after that, he deposited 1 lakh towards PPF. ATC deduction will be allowed. Also deposited 50,000 and 2,50,000 towards T1 and T2 of notified pension schemes account respectively. NPS account, we can claim deduction. Next. He has paid 5,30,000 as advance tax. Very good. And TDS 51,89,000. So find out the tax liability first, from which deduct the 5,30,000 as advance tax, 51,89,000 as TDS. If any liability is there, that should be paid through self-assessment tax. That should be paid through self-assessment tax. So this is a question given to you, and from this question you ask the MCQs like, calculate the amount of deduction available to Mr. A under chapter 6A. So take that medical insurance premiums, preventive medical health checkup, PPF contributions, NPS contributions, and calculate the amounts now. Next, assuming Mr. A pays rent of 65,000 per month for his rented house at Mumbai to Mr. C, a resident individual. Is Mr. A is liable to deduct TDS on such rent? Absolutely yes. Why? Because here the rent paid by him exceeding 50,000 per month. He is not going to deduct the TDS under section 194I, but he should deduct the TDS under section 194IB. He should deduct the TDS under section 194IB. I kadama, IB lo deduct cheyali. If so, what would be the rate and amount of TDS? Rate of TDS 5%, as we already know. 65,000 kadama. 65,000 into 12 months into 5%. Calculation, how much you will get? 65,000 into 12 months into 5%. 39,000 you will get now. So the appropriate answer should be C. Answer should be C. Yes, Mr. A is liable to deduct the TDS at the rate of 5%, amounting to 39,000 in the month of March 2020. In the last month only, now we are going to deduct the TDS. Next, what would be the amount of the net tax payable for the assessment year 2021 in the hands of Mr. A? Calculate the total income, then find out the tax liability. From the tax liability, deduct the advance tax and TDS portion. Then the remaining amount will be payable through self-assessment tax. Compute the interest chargeable under section 234B. When 234B is applicable, non-payment of advance tax or short payment of advance tax. This is a case of short payment of advance tax because he already paid certain amount as advance tax. This is comes under short payment of advance tax. That means the total amount of the advance tax paid by the assessee is less than 90% of assessed tax. The difference amount subject to interest under section 234B at the rate of 1% per month. 1% per month. When it comes to 234B, the period of interest, the interest period starts from the 1st April of the assessment year, ending with the date of payment of actual payment. For every 1 month of delay period, 1% is the rate of interest applicable. Next, second question. Mr. Chanchal, aged 45 years, provides the following data for her gross receipts. For the year 1819-1920, engaged in the HNC business, along with providing services as tarot card reader. Okay. 1819 receipts from business 78 lakhs, 1920 85 lakhs. Receipts from profession, total receipts. Good. During the financial year 2019-20, she paid an amount of 1,20,000 to a contractor for polishing her old furniture. Contract payment 194C comes into picture. 194C comes into picture. Here you can see the preceding previous year, the turnover is less than 1 crore. That means her books of accounts are not subject to tax audit during the preceding previous year. Under Section 194C, not applicable. But you should deduct the TDS under Section 194M. 194M. Right. She has taken the services from a renowned interior designer for her self-occupied residence house property, for which she paid 2,50,000. 194J actually should be applied, but here not applicable. Again, 194M comes into picture. On 28 May 2019, she sold one commercial property for 50 lakhs. So 194I8 not applicable because, stamp duty value 52 lakhs and still not applicable. That 5% condition not satisfied. The brought forward long-term capital loss from unlisted shares financial year 18-19, 7,80,000. Basically, for long-term capital losses, inter-head adjustment is not allowable. Right, long-term capital losses should be set up with long-term capital gains only. Right, look at that question mark. First question. What is the first question you have taken? You have taken the first question that is Mr. Chanchal liable to tax audit under the Income Tax Act 1961 for the previous year 1920? For the previous year 1920, answer is no, sir, because her gross total income turnover not exceeded the threshold limit. For 44AB, tax audit ceiling limit is 1 crore. Here, her turnover not exceeded 1 crore, hence she is not liable for tax audit. But basically, you will get a doubt here. So 85 lakhs is a turnover, business receipts. 47 lakhs is a receipts from profession. So total receipts 1 crore 32 lakhs now. So exceeded 1 crore now. You should not apply like that. For business, separate 1 crore limit applicable. For profession, separate 50 lakhs limit is applicable. You should not aggregate both and look at whether for 1 lakh exceeded or not. Not like that. Separately, you need to look into the limits. Her business turnover not exceeded 1 crore. And professional receipts not exceeded 50 lakhs. Hence, she is not liable for any tax audit. What is the total amount of tax to be deducted by Ms. Chanchal for the previous year 1920? Appropriate sections you need to apply, right? That respective sections, and basing on that, we need to deduct the TDS. What is the nature of capital gains chargeable to tax in the hands of Ms. Chanchal? Look at that capital gains transaction and get to know that. Next, where it is actually capital gains related. This transaction, right? She purchased on 28th April 2017, sold on 28th May 2019. Purchased on 28th April 2017, sold on 28th May 2019. So it's an immovable property, first of all. For immovable property, we need to look into the period of holding 2 years. Here, 2 years exceeded. 2017 they purchased, 2019 they have sold. 2 years exceeded. So it's a long-term capital asset. Apply that indexation factors and everything, calculate the long-term capital gains. Next, losses to be carried forward. Then look at here. Mr. A, aged 45 years, sold an agricultural land for 52 lakhs on 4th October 2019 and acquired at a cost of rupees 49,25,000 on 3rd September 2018. Here comes the important point. Situated at 7 kilometers from the jurisdiction of municipality having the population of 4 lakhs. If the population is less than or equal to 8 kilometers, if the location from the municipal local limits, the population should be in between 1 lakhs to, exceeding 10 lakhs. The population should exceed 10 lakhs. Right, Ma? We have seen that location specific conditions and population specific conditions. Distance condition and population condition. If the distance is less than or equal to 2 kilometers, less than or equal to 2 kilometers from the municipal local limits, the population should exceed 10,000 but not exceeding 1 lakh. Not exceeding 1 lakh. If the distance is less than or equal to 6 kilometers, the population should exceed 1 lakh, but it should be less than or equal to 10 lakhs. If it is less than or equal to 8 kilometers, the population should exceed 10 lakhs. Then only it is to be treated as a specified area. If it is a specified area, any agricultural land situating in that area should be treated as a capital asset. If any of these two conditions are not satisfied, it is not a specified area. It is not a specified area. Hence, any agricultural land situating in that, not a capital asset. You can see here in the question, the land was situated at 7 kilometers under this condition. And the population should exceed 10 lakhs. What is given there? The population is only just 4 lakhs. And is it a specified area or a non-specified area? It's a non-specified area. Since it is a non-specified area, that agricultural land is not a capital asset. So since it is not a capital asset, no need to calculate any capital gains. So for the first transaction, no need to calculate any capital gains. Okay, next one. And also sold another agricultural land for 53 lakhs on 12 December 2019, acquired at a cost of rupees 46 lakhs on 5th December 2018. 5th February 2018. Situated at 1.5 kilometers from the jurisdiction of municipality, having a population of 12,000. So just now we have seen, if the distance is less than or equal to 2 kilometers, the population should exceed 10,000, but not exceeding 1 lakh. So 1.5 kilometers, satisfied, and population 12,000, satisfied. Greater than 10,000 nega. So distance condition satisfied, population condition satisfied. So that 1.5 kilometers area to be treated as specified area. Now in this radius of 1.5 kilometers, if you have any agricultural land, it's a capital asset. It is a capital asset. Are you following, Ma? Now in this case, the second agricultural land is a capital asset. You need to calculate capital gains. When you have purchased, you have purchased on 15th of February 2018. When you have sold 12th December 2019, and held for less than 2 years. Less than 2 years, it is a short-term capital asset. It's a short-term capital asset. So what is the full value of consideration? 53 lakhs minus cost of acquisition 46 lakhs. So short-term capital gains 7 lakhs. Short-term capital gains 7 lakhs. That's the answer. Answer B is correct. Next. After that, yet another question is regarding capital gains. Right? Same, that number of shares purchased and sold in the different time periods. Give that indexation benefits if it is a long-term capital asset and calculate capital gains. This was about the interest on belated payment of TDS. If it is an amendment provision, then I will discuss more. Nishant, a resident but not ordinarily resident for the previous year 1819 and resident and ordinarily resident for 1920. Okay. Has received rent from property in Canada amounting 1 lakh during the previous year 1819. He has deposited the same in a bank in Canada. During the financial year 1920, he remitted this amount to India through approved banking channels. Is such rent is taxable in India, and if so, how much and in which year? See, first of all, the taxability doesn't arise with respect to previous year 1920. The taxability doesn't arise with respect to previous year 1920. So forget about 1920 because it is not the income relating to 1920. It is an income relating to 1819. In the 1920, you brought it into India. You have not received that income during the year 1920. So forget about taxability during the previous year 1920. Think about taxability during the previous year 1819. During the previous year 1819, you have received a rental income of 1 lakh. First of all, decide the nature of income. Is it an Indian income or foreign income? It's a foreign income because the property located outside the India and the rent is received outside the India. Since place of accrual, place of receipt outside the India, it is a foreign income. Since it is a foreign income, taxable only in the hands of resident and ordinarily resident. Right, ma? Two exceptional cases taxable in the hands of resident but not ordinarily resident. Of course, this is not falling in any of the two exceptional cases. For 1819, your status is a resident but not ordinarily resident. Hence, this 1 lakh is not taxable even for 1819. Even for 1819. So the answer is D. No such rent is not taxable in India either during the previous year 1819 or during the previous year 1920. Option D is correct answer. Mr. Dinesh, a resident in India, has a gross total income of 2,30,000, comprising of interest on savings account. He incurred expenditure of 2 lakhs for his son for his study tour to Europe. Whether he is required to file any return of income for the assessment year 2021, answer is absolutely no. He is not required to file any return of income, sir. Answer is D. As his gross total income not exceeded basic exemption limit, and that foreign tour income expenses also not exceeded 2 lakhs rupees. And of course, even that expenses incurred not for himself, incurred for his son Adi Kuda regarding a study tour in Europe. So not required to file the return of income. Now look at this. This MCQ you might expect definitely during this attempt. This is regarding TDS under section 194N. TDS and cash withdrawals exceeding 1 crore. Mr. Nihar maintains a savings account and a current account in Mera Bank Limited. The details of withdrawals on various dates during the previous year 1920 are as follows. So 5th April 2019 savings account 15 lakhs, 10th May 2019 22 lakhs, 25 June 2019 savings account 20 lakhs, and 17th of July 2019 5 lakhs. See, up to 17th of July 2019, for these withdrawals, 194N provisions are not applicable. No need of deduction of any TDS. And even that aggregate amount of withdrawals, if you calculate 35 plus 27, which comes around 59 lakhs. Sorry, 25. 45, yeah, 59 lakhs, 62 lakhs, sorry, 62 lakhs, 62 lakhs. So 194N provisions are not applicable because 194N provisions are came into effect with effect from 1st September 2019. 1st September 2019. So any withdrawals prior to 1st September 2019 not covered by 194N, but will be considered for the calculation of aggregate cash withdrawals limit. 1 crore will be considered for the calculation of that 1 crore limit. Clear, everyone? Now after that, 35 lakhs, 25 lakhs from savings account and 38 lakhs from current account. Now calculate the total withdrawals, ma. Total withdrawals 35, 35, 70, 95 lakhs from savings account, 65 lakhs from current account. Total withdrawals 1 crore 60 lakhs. Total withdrawals 1 crore 60 lakhs. Now calculate the TDS under section 194N. On how much amount should I calculate TDS? On how much amount should I calculate on TDS? On the entire amount of the excess portion of 60 lakhs. In excess of 1 crore, whatever the withdrawals are there, in excess of 1 crore. And even that excess withdrawals also we have made prior after 1/9/2019. So excess withdrawal in excess of 1 crore 60 lakhs now. 60 lakhs into 2%. 60 lakhs into 2%, you will get 1,20,000 as an answer. You can see the answer D. TDS of 1,20,000 is required to be DDA. TDS of rupees 1,20,000 is required to be deducted. Okay, ma'am. Next, here comes the descriptive questions. First one is determining the residential status, ma'am. Whatever the time limit entered into the continuous discharge certificate. So in this question from 16th of August 2019 to 21st of January 2020, that time period should be treated as a stay outside the India. While calculating the number of days stayed in India, this time period between date entered into the time continuous discharge certificate, 16th August 2019. So 16th August 2019 to 21st January 2020. This time period you should treat it as a place of stay outside the India. A place of stay outside the India. Only for the remaining period you can take the place of stay in India and then a period of stay in India. Then basing on that you need to determine the residential status. This provision which we already know. Explain brief reasons whether the following incomes can be chargeable to tax. Agricultural income, can be regarded as agricultural income. Rent received for letting out of agricultural land for a movie shooting, absolutely no. It will not be treated as agricultural income under section 10 clause 1. In order to treat it as an agricultural income, that agricultural land must be situated in India and that land must be utilized for the agricultural activities. Only when whatever the income you are getting in that case, that will be treated as agricultural income. It was explained in section 2 clause 1A. 10(1) exemption, the explanation is given in section 2 clause 1A. Okay, now next, income from sale of seedlings in a nursery adjacent to the agricultural lands owned by an SSC. Income from the seedlings and saplings will be treated as an agricultural income. This is in line with the judgment given in the Soundarya Nursery versus CIT. In that case, this judgment was given. Any income arising out of seedlings and saplings grown in a nursery, that income should be treated as agricultural income. Right. Mr. Neeraj, a salaried employee, that means all these provisions are regarding income from salaries, which all you know. If any amendment relating to this, I'll discuss. That's it. Yes. Now, this 12th question, mark it as very, 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 very important. Very, very, very important. As many stars as possible, you can put it here. Most important. As I said, the very important amendment in income from house property. What was that? Now the SSC entitled to claim 2 properties as self-occupied. As I said here, you are given with 3 self-occupied house properties. So that means you will be having 3 options. For 3 options, calculate income from house property. The option having the lowest income from house property should be selected. You can get 1 question compulsory from this amendment. 8 marks, pakka. Definite question. I think there is one more question in the ICA material. In the May 2000 amendments, May 2020 amendments, the question is given like regarding Mr. Ganesh. Mr. Ganesh has 3 houses, all of which are self-occupied. So there is one more question you can search in that May 2020 RTP. You'll get that question. Do that question as well. Do that question as well. Ardhamavutunda. Right? So very important. Definitely you will expect a question. Next. Mr. Karan gifted a sum of 9 lakhs to his brother's minor son on 1st May 2019. On the same date, his brother gifted debentures worth 10 lakhs to Mrs. Karan. Cross transfers. We have a concept called cross transfers in the clubbing provisions chapter. Cross transfers in the clubbing provisions chapter, if you remember. The last topic we have learned in clubbing provisions, cross transfer. Apply the provisions of cross transfer and then club the income. Here, 9 lakhs gift is given by Karan to his brother's minor son, and his brother gifted 10 lakhs worth of debentures to Mrs. Karan. And while clubbing the income here, whatever the interest income his brother's minor son is getting, that interest should be clubbed with the total income of his brother. And while clubbing that interest income, claim 1032 exemption under section 1032, 1500 rupees. While clubbing the minor child income, anyhow we are entitled to 1500 rupees as exemption under section 10 clause 32. Now while clubbing the interest on debentures of Mrs. Karan, the clubbing should be happened in the hands of Mr. Karan, but you should not club the entire 10 lakhs interest. Only 9 lakhs worth of interest only. The interest attributable to 9 lakhs only you have to club here. That is very important point. Next. 14 is regarding calculation of the gross total income. You have given with some losses as well. So that means this question is relating to set off and carry forward of losses. This question is relating to set off and carry forward of losses. Okay, ma'am. Income from textile business, income from speculation business, loss from gambling, that is neither eligible for set off nor eligible to carry forward. Loss from gambling, neither eligible to set off nor eligible to carry forward. That will be lapsed. You just ignore it. That will be lapsed. Loss from maintenance of resource, it should be allowed as set off only from the income from same activity. I guess there is no income is given from the same activity in the given question. That should be carried forward to next year. Directly you can carry forward. Current year depreciation of textile business, from the textile business income you have to deduct. Unabsorbed depreciation, deduct. Speculation business loss of 1920, adjust with speculation business income of 25,000. The maximum loss you can set off only 25,000. That remaining 5,000 carry forward, because you cannot set off speculation business losses with non-speculation business profits. And this one is regarding PGBP. It's a PGBP question mark. All the provisions which you know already. That's it. You are required to find the total income of Mr. Suraj. This question is directly taken from ICS study material. Same question we have in ICS study material. Right. So it's time to wind up, close the session. Now, if you have any doubts, ask me, ma. About the question paper pattern, and even I will discuss November 2019 question paper. November 2019 question paper. When it comes to GST amendments day, that is day after tomorrow. I will give you the examination tips, presentation tips, and I will discuss November 2019 question paper in the day after tomorrow's amendments class. Ashmi Swachla, that I will look into it and I will let you know. Anyone, any doubts?